Natural gas prices fell toward $2 on early Tuesday as traders maintained a sell the rally approach, signaling skepticism about the market's ability to sustain price increases. However, it seems the bulls were unconvinced by this speculative move and quickly pushed prices back above the $2.10 threshold just 3 hours later. Finally, nat gas settled above $2.10, driven by strong demand for cooling, as record-high temperatures swept across the Midwest, affecting over 60 million people and boosting air conditioner usage. Nevertheless, national demand will ease to much lighter levels later this week as vast stretches of the U.S. experience comfortable highs of 60s to 80s due to numerous weather systems impacting the U.S. Hotter exceptions across the western and at times the southern U.S. with 90s. Meanwhile, today's price action showed that gas traders finally realized that the storage surplus continues to decrease with the scaring speed of 2.2 billion cubic feet per day ahead of the approaching winter season. And even if major gas producers will not announce additional production cuts, the storage surplus should shrink to around 50 billion cubic feet only by the end of the year. In the case they announce the additional production cuts, we may see an impressive price rally somewhere in the October-November period. Actually, today's storage data projections indicated an even steeper decline in the surplus expected over the next 4 weeks, with a drop from 301 to 282 billion cubic feet. Gas output in the lower 48 U.S. states slid to an average of 102.3 billion cubic feet per day so far in September, down from 103.2 billion in August. Analysts forecast average gas demand in the lower 48, including exports, will fall from 102.8 billion cubic feet per day this week to 101.1 billion next week. Gas flows to the 7 big U.S. LNG export plants rose to an average of 13.1 billion cubic feet per day so far in September, up from 12.9 billion in August. That compares with a monthly record high of 14.7 billion cubic feet per day in December 2023. From a technical perspective, the short-term outlook for nat gas remains cautious, with the $2.15 resistance level in focus. On the upside, the market faces resistance at a short-term pivot of $2.15 and further resistance at the $2.25 level. These levels are pivotal as traders continue to embrace a sell-the-rally strategy, indicating doubt about the market's capacity to sustain price gains. On the contrary, a dip to the $2.09 level would indicate increasing short-term selling pressure, with a retest of $2.05 as the next likely target. This level is expected to draw in new enthusiastic buyers as the high-demand season approaches. Please like, subscribe, and comment to support the channel. See you in the next one.